All right, let's get right into it. The end of the year is breathing down our necks, which means the clock is ticking on some huge financial moves that could save you a ton of money. If you wait until January, well, you might be too late. So let me ask you, are you? Because that's the big question right now, isn't it? There are a few critical, absolutely non-negotiable deadlines coming up fast, and honestly, every Canadian needs to know about them. Missing out could really sting your savings and your tax return next year. And there's the date, December 31st. For almost everything we're about to talk about, this is it. It's the point of no return for the 2025 tax year. The stakes are definitely high, but the good news? You've still got time, if you act now. So here's our game plan. First, we're going to tackle the number one priority, the FHSA and this wild trick to double your contribution room. Then we'll talk about how to claim some free government money with the RSSP. After that, a super important hack for your TFSA, and finally, the one big account that breaks all the rules, the RRSP. And don't worry, we'll wrap it all up with a simple checklist at the end. First up, the most time-sensitive and, frankly, the most important item on our list, the First Home Savings Account, or FHSA. If you have any dream of buying a home someday, this is the single biggest move you need to make before that ball drops on New Year's Eve. So what is this thing anyway? The FHSA is an incredible, almost magical tool for anyone hoping to buy a home. Think of it like a super hybrid account. Like an RSP, any money you put in is tax deductible, which lowers your tax bill. And like a TFSA, all the growth, all the investment gains, completely tax-free. It is literally the best of both worlds. Okay, now listen up, because this is the weird rule that trips up so many people. Unlike a TFSA, where your contribution room just kind of shows up automatically every year, the FHSA is different. Your contribution room doesn't even exist. It's not even a thing until the year you actually open an account. And this right here, this shows you why that rule is so incredibly important right now. If you open an FHSA and you don't even have to put a dollar in it before December 31st, you instantly unlock $8,000 of room for 2025. That room carries forward, and on January 1st, 2026, bam, you now have $16,000 of total room. But if you wait just a few days and open it in January, you miss out on 2025 entirely. Your room is just $8,000. You literally leave $8,000 of potential contribution space on the table, gone forever. So yeah, let that number sink in. $16,000. That's the potential room you can have on day one of the new year just by taking 5 minutes to open an account now. It is without a doubt the biggest and easiest win on this entire checklist. All right, next up, let's talk about the RESP, the Registered Education Savings Plan. The theme here is pretty simple, and it's a good one. Don't leave free government money just sitting on the table. And getting it couldn't be more straightforward. If you have a child, you pop $2,500 into their RESP before the December 31st deadline. And then, like clockwork, the government automatically matches 20% of that and drops a $500 grant right into the account. It's a guaranteed 20% return on your money right out of the gate. No strings attached. I mean, really, what more is there to say? It's as clear as day. You just don't get many chances to get a guaranteed return from the government. So if you're able to, making that contribution before the year ends is one of the absolute smartest things a parent can do with their money. Okay, let's switch gears and talk about the TFSA. Now for this account, the deadline isn't about putting money in, it's about taking money out. Believe it or not, the timing of your withdrawals is a really big deal, and a lot of people get this wrong. Let's break down exactly why. See, when you take money out of your TFSA, you get that contribution room back. But, and this is the all-important but, you only get it back on January 1st of the next year. So look at this. You pull out $2,000 in December, you only have to wait a few weeks until January 1st to get that room back. Easy. But if you wait and you take out that same $2,000 in January, you have to wait an entire 12 months, all the way until January 1st, 2027 to get it back. So the takeaway here is crystal clear. If you think you might need to take some cash out of your TFSA anytime soon, do it before December 31st. It is the absolute best time of year to make a withdrawal. And January, it's the absolute worst. All right, I know. We've been creating a lot of urgency around this December 31st deadline. But now it's time for a plot twist. Let's talk about the one major account where you actually don't have to rush before the end of the year, the RSP. So yeah, after all that hustle and bustle for December 31st, what's the one big exception to the rule? Well, it's the classic Registered Retirement Savings Plan, and it plays by its own set of rules. And here's the date you need to know, March 2nd, 2026.
That is your actual deadline to contribute to an RRSP for your 2025 taxes. So for this one, you can take a breath and give yourself a little extra time. And there's a really good reason for this later deadline. It gives you those first 60 days of the new year to figure out exactly how much you earned in 2025. That way, you can make a really strategic RSSP contribution to lower your taxable income as much as possible. And maybe, just maybe, get yourself a nice tax refund.
Phew, okay, we have covered a lot. To make sure it all sticks, let's put everything together into one final, super clear, actionable checklist. This is your cheat sheet for exactly what to do and when to do it. Let's run through it one last time. For your FSA, the key action is to just get the account open, even with $0 in it. Deadline, December 31st. For the RESP, contribute that $2,500 per child to snag the grant. Deadline, December 31st. For the TFSA, if you need to take money out, do it now. Deadline, December 31st. And finally, for the RRSP, you've got time. Make your contributions for 2025 anytime before March 2nd, 2026. And just one last, very practical piece of advice. Please, please, please don't wait until the afternoon of December 31st to do all of this. Bank transfers, account openings, they can all take a few business days to process. So plan ahead, give yourself a bit of a buffer, and make sure your transactions actually go through on time. You don't want to miss out because of a technicality. So there it is, your complete year-end tax checklist. You've got all the info you need. The only question left is, which of these moves are you going to make first to set yourself up for a richer, smarter 2026? Thanks for tuning in.